End of day review for Tuesday, the 14th of November 2023. Starting with news, as you can see, there was a claimant count change for GBPUSD. This was worse than expected. As a result, we anticipated GBPUSD to move downwards. However, it didn't play out this way. Instead, it continued to move higher until the New York session, and I guess it's because of this medium impact news, which was positive, thus making the fading the news situation slightly difficult, because one would place emphasis on the red folder news, but they both were somewhat equally weighted, and it turned out that this played more emphasis. And then we came into the New York session, and inflation news was better than expected for the USD. But what this means is the USD will weaken because it reduces the likelihood for rate hikes by the Fed. Moving on to the trades I took for today. I took the short based on an extreme approach aggressive entry. I wasn't satisfied with this being a valid POI, so I used this candle that swept that as liquidity in the leg to somewhat enter there. I put my entry here to cover the spread. What I can note is had I entered over here based on this POI, I could have potentially been break even. However, at the same time, I've been noticing a trend in my losses, and that's the fact of something to do with session ranges and its relation in regard to the POI. So, for example, if we take today's trade that was lost, what you can see is the POI formed in the Frankfurt session, right? So Asia liquidity was taken, then we started creating high of the days and whatnot, and then we got this change of character which then validated our extreme entry. We could have entered from here. We don't need liquidity in the leg under the extreme approach, and theoretically we could have been break even at this point. However, because at this point if we said the POI was this and we got a break of structure, then we're saying supply is fully in control, and there's of course the chance that the session will pull back in to the POI so that it can build a chain or whatever. But what it means is I wouldn't have broken even. I would have left this open because it's better position, and I would have considered taking a second position and breaking that. Either way, the result would have been the same, as in it would have been a loss. However, if we are cognizant of the session liquidities at play, if you look at this, Frankfurt created this POI, right? So when we come into London, you will notice that until 11:45 a.m. it is only at this point when the London session takes out the the Frankfurt liquidity. So when this change of character happens, we essentially creating a POI related to the Frankfurt session, and without the Frankfurt session's liquidity being taken, at least on one side, then it puts us at risk of being the liquidity, and that's precisely what happened here. So you'll see the Frankfurt liquidity was taken, and then price came up and then went down, and then obviously at this point we're getting close to CPI, so we would have closed the trade because we don't know what this candle would turn out to be, right? And if you look at it, it is a 95 pip move candle in the middle of probably a couple of seconds. You certainly don't want to be in that. Besides, that spreads would be ridiculous and you'd probably be taken out of your stop loss. So that's the reason why we don't trade that. But yeah, I guess that concludes my live trade review. It's just something I'm going to dig into more detail and see if it's worth putting in place rules to mitigate losses like these. Um, I guess the other point is I should also consider my break even protocol under these scenarios in more detail. Okay, so let's do our end of day markup. As usual, I won't talk much. You can observe the markup, and towards the end I'll just make a summary. I guess while I'm at it, let's just do an overview of the daily and the 4 hour. So we start on the daily. What we can see is both yesterday and today. Yesterday and today, sorry, the past 2 days, excluding today, were bullish, right? So the likelihood of the third day being bullish is 25%. It's not impossible, but the probability is there. Our um, our bias is thus to short, um, yeah, to short for the day, expecting a bearish candle to neutralize the continued trend. Um, we are not in a 4H ERL continuation situation, so we can't trade against the idea that the third day will be bullish. We can't trade with the idea that the third day will be bullish, so we have a short bias that we can't go against, even though our technical analysis suggests that we can long and we can short. The long's target would be this substructure and the short's target would be that substructure. Hence why on the 5 minute your emphasis for the day is on taking short trades. Okay, so as you can see, coming into Frankfurt, we had the chock and supply taking control, which would create a valid POI to trade from. Unfortunately, what you can then see is that the Asia range remains intact. So we have to wait for the Asia range to be swept first before we can validate trading. The Asia range is then swept, we create a Frankfurt high of the day, which then brings off a change of character and validates our extreme approach. We then, in my live trading, I wasn't happy with this as the POI or using the range, so I considered this as like liquidity in the leg and keeping my POI succinct to this. The reason why I wasn't happy with this as POIs is because if you look at these candles, each candle makes a lower low. Anyway, however you chose to enter would have resulted in a loss, because when we break this structure, this would have been a this is supply fully validated in control, and I would have considered a secondary entry. Since there's no liquidity in the leg, I would have placed my order here, but since I already have an order in that position, I'd leave this position open, and I would have not taken the second position. Also, another thing to note is the stop loss is significantly larger than if I have an entry here with reasonable stop loss. Because it's a matter of judgment, I prefer the smaller stop loss, especially given that we would need to close the trade prior to CPI news per our trading plan. So either way, this loss was unavoidable, but like I said in my live trade review over here, I am observing a pattern with session created liquidity. So you got Asia liquidity, Frankfurt liquidity, your London liquidity. I don't separate the lull in London, they are the same session in effect, and then obviously New York, but that's the end of the day, so that session liquidity isn't too relevant unless you're trading Asia. But yeah, that's essentially my end of day review. It's identical to my live trade analysis, which is a good thing, but the idea is not just to do EODs and compare to live, it's also so that you can identify patterns and improve. At present, my risk management rescue protocol is at play due to a losing streak, and the requirements of this plan or rescue plan is that I evaluate if all my past trades were per my trading plan, and then work on identifying trends and patterns that I can identify and evaluate, and then assess and review as to whether it's actually worth implementing and amending, because there is a gap in my trading plan. My initial preliminary assessment is that there may be a gap and something I'm not realizing, so I'm investigating further, and I'm currently analyzing 10 plus years worth of data to see if there's a valid conclusion to be made in regards to session liquidity, and at least one side of the session or previous session being swapped prior to taking an entry to prevent you being used as the liquidity because your POI is within the session range. But yeah, that's essentially the end of my end of day review for today, and I guess we'll chat again tomorrow.